Okay, right, so let's, what I'm going to do is I'm not going to just go through everything again because I've done that in the labs. What I'm going to do is ask if you've got any questions relating to particular bits. Don't forget, I'm not going to say move into this market, do create 3 brands. I've had a few questions from people about bank loans and can they take bank loans out, and the answer is no, not yet, next quarter. Okay, so no bank loans until quarter 5 because that's just the way the game works. And folks, okay, and somebody said to me, well, what happens if we try and emulate another team's brand and they improve it in the meantime? Well, that's just life, isn't it? I mean, you don't know what other teams are doing in this quarter. All you've got is intelligence about what they did last quarter. The only way you're going to know whether they're improving a brand or selling in the same region as you is going to ask them, and they'll probably tell you to go away. So don't expect too much back from them. Okay, so performance report. Really, the market share, the sales, and all that kind of stuff are fairly obvious, all right? And all I would say is, in the income statement, it's not going to look great, all right? So don't worry about that. Don't start getting hooked up on, oh dear, the earnings per share is too low, or the net revenue or the net earnings is minus. It will be. That's just the way it will be in the early part of the game. Okay? Balanced scorecard, we said this is a team that did really badly. Everybody, and this is at the same stage as you guys, they got a 0, hang on a sec, 0 scorecard. And that's the same for all of you. Yeah, what was the question? Shout, will you? That's a very good question, but well done. Well, look, you're very observant. Yeah. The rest of you could have also said that, but that's all right. It's all right. Don't be afraid to tell me what you think. Just don't insult my football team and nobody will get hurt. Okay, there we are. So luckily I wasn't actually showing you anything from the previous ones. Okay, so market share and sales. You know that the sales are going to be limited. And now you see, when you look at the demand that you had and what you were able to sell, you'll now see why it was I said, really, don't go higher than about 200. You could do, but you probably won't be able to satisfy it. So there was one team that had a demand of over 400, but they had stock outs of about 200. Guys, can you stop talking, please? Hello? Thank you. Okay. Sorry, just been a bit of a tough day. I'll be nastier to the people at 4 o'clock than I'm to you guys, so don't worry. Okay, so do not worry about that. That is normal. So the thing which is going to change probably next quarter is the financial performance. The more you sell, the better your financial performance. Okay? And you can see that there are naturally numbers that are bigger. Some of these numbers won't get more than 1. And there's some numbers that will go into maybe the hundreds. So you can see what has the biggest influence on your game. And it's going to be the financial performance and probably the investment in future. So the investment in future is things that you've been doing, like sales offices, new brands, but also lots of things you can do in the next couple of quarters. Okay, any questions on the balanced scorecard? I know I'm in a bad mood, but you can ask me questions. I won't shout at you. Okay, good, excellent. Okay, so really that's just kind of looking backwards. So don't forget that if you look at, if I go forward, I'm going to show you this game. This is a team that did really badly, all right? Or they didn't do disastrously, but they didn't do very well. They came bottom of their game. Just look at that top right-hand corner where it says 0.00 underneath in-house, which is the name of the team, and see how that number will change over time. Okay, so still doing very bad in quarter 5, starting to get a positive score. Okay, starting to improve. Again, they weren't very good. Okay, so you can see it kind of fluctuates, but ultimately what counts for them is at the very end of the game, at the start of quarter 9, as if you were going to play quarter 9, but you don't, is the average, the cumulative balance scorecard. So that's what they ended the game with. Other teams will be getting scores of 1,000, 10,000 maybe. Okay, so what I'm saying is, don't judge your performance at the end of the game by how well you're doing now, because it will be a very inaccurate way of looking at it. Okay, marketing. Let's just talk about brand management. Any questions about brands? Let's see if I can preempt you. Do you build more brands? Yes, you do. Should you improve your brands? Yes. Otherwise, if you think about it, naturally, we'd still be driving in really rubbish cars because nobody thought in the 70s there was much point in improving them. Clearly, you've got to improve every time that you can. Okay? How many brands should I build? Oh, well, that's a question of how many you want to build. Sorry, how many do you want to design? It's a question really of how many you want your factory to build in this quarter. I think building more than 3 may be a mistake, but you might get away with it. Okay, so imagine that you have 4 brands that you're building this quarter, and for some reason, because the way the factory is set up, you never get around to building that 4th brand. You do still get brand judgment for it, okay, and the price and the advert. If nobody buys it because you never built any, you would still get brand judgment. So it's worth thinking about that, okay? You do still at least find out how good it would have been if only your factory had been able to build it, okay? So, and a question that's come up many times, do I continue to sell the old brands even if they're not very good? That's up to you, okay? If you decide to get rid of all of the old inventory through unwanted inventory, you know, sell it to the industry as scrap, then even this quarter, you may not be allowed to modify it because you still do have it. So you just have to build a new brand in the same way that you would just modify an old brand. I think it costs the same. It's just a question of naming it something that makes the consumer realize this is an improved version of the previous one. Okay? Okay, that was me not talking about brands, but I did. Any questions on this? Yeah. It's all right, but my hearing is very bad, right? So, yeah.
So are you saying that we can't do anything about the existing inventory this quarter?
Well, you can actually get rid of it this quarter, but I think it has to be 0 before you can modify an existing brand.
Yeah, so how do we do that?
So you don't. What you do is create a new brand. The cost is exactly the same. If you call, let's say, your laptop, I don't know, Innovo XP, right? The old one. You've got 50 left. You sell them to the industry. You still, the game thinks, yeah, but they haven't gone yet, so you can't modify that brand. I'm just going to click the button that says create new, build a new one, same cost, and call it the Innovo XP1 or whatever, and just put the features in that you want to put. So effectively, you're doing the same thing. It's just a different way around that problem.
And how do we stop the production like of the previous? How do we stop that one?
I'll show you. Okay, so that's just a good question. Okay, so what you don't want to do, you've got rid of all that crap to the industry. You say, right, let's go to the new stuff. But nobody told the factory to stop building the old one. Bit of a problem, really, because you have lots more of them next quarter. So I'll show you that. Hopefully the guys online could have hear what I say. Let me just make that person a participant. Okay, good question. It is a good question. So what you do is, so there are 2 things you might want to do, all right? You might say, right, well, if I've got rid of it through unwanted inventory, 2 things I need to do. One is get the right screen up. It is pricing, price and priority, make it unavailable for sale, all right? Because what will happen, what would happen naturally then if I left that box ticked? You see, having people trying to sell these brands that we're not making, all right? So don't make it available for sale. If, however, you think, I'm not going to get rid of them through unwanted inventory, I want to sell them at a reduced price, that's fine. In which case you leave that box ticked available for sale because your salespeople will then sell it. But of course, if you're not making any more and the demand is higher than the inventory that you've got left, what you're going to have is stockouts. All right, so you say, right, I've got 50 left, go and sell them. The demand was 150, I've got 100 stockouts, which is going to affect the demand of your new brands, all of your brands. So it can be a bit of a double-edged sword, really. Yes, you make more money, but B, you risk there being stockouts. But the question was, what do you do about stopping to build it, or stopping building it, I should say? Go to target and replenishment point, and then just untick that box. Okay? So target and replenishment point for telling the factory to stop producing it, and price and priority to sell the salespeople to stop selling it. Okay? So, any other questions on brand management? Yeah. Yeah.
How is likely they are being sold and exported? So they will be 100% sold to the end, or
Not necessarily. It may be that your salespeople are prioritizing that stuff. It may be that they're still not priced competitively to get rid of them. But you could just say, well, let's put one salesperson in to sell that, or we have an advert or a new advert to say new lower price. So you can't guarantee it. And I just think it's cleaner to say, okay, we've made a bit of a loss, get rid of it through unwanted inventory, then it's gone, and we can focus our attention on the new brands. That's what I would say. Because that way, it just means that your salespeople are looking at what they should be selling, the new improved ones than the old one. If you've got a couple of hundred, you might think, well, you know what, let's just get rid of them through selling them as per normal. Yes. Was there a hand up there? Well, it may be. If you decide that that brand is still pretty good, then just keep doing what you do. Maybe adjust the price, find better adverts. The only thing I would say with that is that if, let's say, your factory is told, right, we need our demand is going to be 650 this quarter, but you've got 100 items still left in inventory. You're going to have to tell it, actually, you've already got 100, we only need to build 550. So to make sure when you set your operating capacity, it's set at a level which represents how many more you have to make, because you've already got that stock. Yeah? So I think, yeah, there's a sort of argument to say that we could sell it per normal, but just look at, on the help, ill will. ILLWILL. That's lost sales. See the effect of that on the next quarter's demand. Okay, it's not great, but of course, if you've got, let's say, 25% of your demand last quarter was lost through, not having enough brands, I think there'll be a 12.5% effect on your demand. It will still go up, but it might drop by 12.5%. So you've just got to take that into account. Okay, I mean, just keep improving the brands. The danger is of sticking with the brand you had last time is, what happens if somebody said, oh, they're only 69, I'm going to produce a better brand, of course they can't guarantee this, and sell it in that region, and you're keeping the same brand there, you might find that the demand you think you had has been lost because somebody comes in with a better offer or a better brand. So that's the risk. Pricing, pretty simple. Well, it's not pretty simple at all, but you understand that getting the price right is actually quite difficult. What the market research told you about a price has probably turned out to be a bit rubbish because, well, actually, it was very difficult to get a decent price for a traveller. Although, having said that, of course, UPC, UPAD got the price absolutely bang on. I'm not going to tell you what the price was because, well, you understand. But you see that it's actually quite difficult. But the hardest one to get right is the cost cutter. So it may be that you priced it according to the market research, only to be told, well, that's way too expensive. In which case, your market research now probably is not that useful. Okay, so just be guided by this. If you need to drop the price, you might want to just cut down the rebate, or you could just drop the initial price, or both. Okay, so again, just be led by what the market research tells you. Any question on that? Okay, good. Advertising. Okay, so do you advertise? I mean, there's one team that said to, I'm not going to say who it was because it's embarrassing. They said, we need to save some money because we were in a bit of trouble last quarter. We're going to cut down advertising. No, don't do that. Because that's the one way you can get your message across to consumers. If you cut your advertising, you may as well cut your wrists. Okay, don't cut down on that. I mean, yes, try and improve the adverts by looking at other adverts and thinking, did I have too many things in them? Am I saying the right things? Are there new things I could say? And when it comes to advertising and where you put those adverts, okay, so here, let's have a look at how much they did last quarter. So they advertised it quite a lot. Didn't do them much good, but they're advertising more than you would expect most people to have done last quarter. So they're running adverts 4 and 3 times respectively for their brands. I don't know whether that's the best thing to do, but I think it's certainly better because you're learning more about what works and you've got more confidence that advert is going to be selling a good brand. Okay, so those were adverts run locally for the local sales offices, and they're still not advertising very much for the web office, but you might say, well, that's because the web still isn't very cost effective. And one team said, we're thinking of cutting down maybe the salespeople and the advertising in the web, and maybe investing a bit more in the sales office because the demand is that much higher. And you think, well, a reasonable assumption. Until you can see your web demand increase, maybe it's worthwhile just kind of spending a little, not that much on there. But there are things you can do, as we know, to improve the effectiveness of the web. So does anybody have any ad claims that they need to discuss? Because that's where you get those the red crosses, which of course they're not going to have here because their game has been finished, therefore they would have sorted them out. Anybody? Because if you have, I'm sure that somebody else has. Okay, well, this is great. Okay, so really just, look to improve. In terms of brand judgment and ad judgment, if you do well, you could see your brand judgment up to 100 by the end of the game. Okay, the only thing that you may not see go up to 100 is the reliability. We'll come on to that in a bit. Okay, there are longer versions of the game. There's a 12-week version, or a 12-quarter version of the game, but obviously you try cramming that into 7 weeks, and I think we'd all be blowing bubbles by the end of it. So 8 weeks is enough, but that does mean that you can't necessarily do as well as you would do otherwise. Okay, let me ask you a question. Is anybody thinking of not buying market research? Good. Is anybody going to buy market research in regions where they are not either selling or manufacturing? Or you might not want to say. But if you can afford it, do it. Okay? Because otherwise, what are you going to learn? I looked at the example last year, and there was a team that only bought it in one region. So all they're going to find out is what's happening in that region and then missing out on opportunities. It's expensive. Okay, I would say this, and this sounds like I'm saying one thing 1 minute and something else the next. Don't go into debt, but if you do go into debt, do it this quarter because you get $5 million back at the start of next quarter from investors. So you're going to go into debt. If you're going to take any risks, now might be the time to take it because you'd be able to cover your, well, unless it goes spectacularly wrong, you'd be able to cover your debts at the start of next quarter, okay? So, but obviously don't go into debt if you can help it. Any questions on advertising? Oh, this is fantastic. I wonder where most of the questions will come. I think I know. Okay, so sales channels. Again, you know the sales on what margins you're making. So here, their simple one made nothing. I suspect that's because they messed up the factory and didn't actually build it. Okay, so, but they're making a small amount of money. Having said that, of course, when you take into, that's the gross margin, when you take into account advertising, they probably lost money. But that's fine, early days. Okay, channel profitability, so it says that the web, if they had a web office, which they don't, would still be losing money. But stick with it, really. It will improve if you invest money in it. Sales offices. Okay, do you open new sales offices? Yes, unless you've had a financial disaster, in which case maybe that's one of the things that you might decide you can't afford to do now. Okay, maybe. But otherwise, absolutely. How much can you afford? Well, that's up to you. But you still need to be very, very careful about that finishing, that what do you call it? Ending cash. Okay, so yes, open up new places because that will improve your demand, but not if it's going to cause you financial problems. In terms of salespeople, any questions on this? So if you decided that you had 2 innovator salesmen last quarter, but your innovators were much better as a workhorse, if that was the case here, I don't know whether it was, then they moved 2 from innovator to workhorse, and that's fine. You can just reallocate them wherever you want. It's when you actually get rid of salespeople that it starts costing you money, okay? You can't see it there, but this thing called layoff expenses says you've got to pay people to take redundancy. You can't just get rid of them, okay? So think about this, think about your support people, think about 1 person for every 4 salespeople is about the right ratio, more if your segments really care about support. Now, again, if you look at the customer needs and wants, it may not say it in exactly those terms, but that's what they mean. Web sales, same principle, okay? Web traffic, okay, they haven't got a web center. I'm going to choose a different game because otherwise it's impossible for me to demonstrate that. Let's choose one that did okay. And for those online, I will promise to share this with you in a second as soon as I've just found. Yeah, okay, let me just share this. Okay, so here you can see that you've got loads more things you could invest in. Okay, they've chosen not to, which I think is a bit of a mistake. Which is the best one to go for? Well, again, have a look at these curves down the bottom here and see, well, obviously the green one, which is contract with major search engines, that's the one that potentially could give you the biggest increase because you can see it's the curve that goes higher up. Okay, so if you have to sort of pick and choose which ones you go for, that would obviously be the one to go for. Quite where you decide that curve starts to flatten out, that's down to you. I really don't know. I would suggest if you go more than about 140,000, even if you can afford that, anything after that is not giving you a great deal of kind of improvement. Okay. So any questions about web traffic and web productivity? This is great. I think you're all doing really well. It's just you come here to listen to me tell you that you're doing really well. That's what I suspect. I have been wrong before. HR. Pay your people more, they'll work harder. Okay? So I'm just going to go forward a bit. You remember we talked about in the factory, I'm just going to show you this now because otherwise it won't make much sense. So let's look at operating capacity. Remember this thing here, 70%. This is what it assumed your workers would work at in terms of productivity, 70%. Now, of course, if you look at your actual feedback, your market research, these were the Computer Business Company, which is, okay, not the most inspiring of names. It's actually 68, okay? So they're saying, well, okay, I could just leave it at 70 on the operating capacity, but actually, if I just leave this as it is, they're not even going to be that productive. I need to pay them more because I want to be able to maybe suggest that their productivity would be higher. Now, at the moment, you could see that if Puissant here, who have got a productivity of 75.6, if I paid what they paid or more, I could expect to see the productivity going up. But again, it is only a kind of estimation. So let's suppose I was paying the same as Puissant, and I go to my factory and I say operating capacity, well, I could potentially I could have faith that that could be about 76. And then what would happen is, when I set the operating capacity, it wouldn't be as affected as it was before by, limiting factors like lack of productivity, changeover. So it's a way of making your factory more efficient, but that is only a projected figure. I can't just say, make it 100, everybody work harder, because you're not paying them enough to do that. Okay, so just pay them more. So this HR it is part of your scorecard. What it will be, at the end of the game, it will say, and actually even in this quarter, when you get the results back at the start of next quarter, it will say, what's the average productivity of your workforce in your factory and your sales force? 75, 80, so it's going to be 77.5, so that component of your scorecard will be 0.775. Okay, and because all of these things multiplied by each other gives you your scorecard, the more you increase that, the more you increase your overall score. So there is a point to this. You can't just decide you're going to have a really demotivated workforce, because it will actually limit the overall score, because it's affected by that HR. So here, as an example. Okay, here we go. So the average productivity for this company was 0.686, which means when you look at the actual scorecard, so 0 is all of those numbers below it multiplied by each other, and because you've got a minus, it's going to be a 0, right? But if all of those numbers were positive and I was to increase that to 0.9, then all of a sudden that sees a fairly big increase in your overall score. So all of these things are important. Okay. So any other questions on HR? Just pay them more and look and see what's important to them. Look at those numbers down the bottom here, and that tells you the relative importance of the salary, the health benefits, etc., etc. Okay. Okay, manufacturing. Right, so here we are. I suspect this is where the majority of questions will be. Okay, so here, let's have a look. That's what happened last quarter. So the result of last quarter is they had a net demand of 134. They sold 117. Pretty good, actually. The problem is that meant there were 17 customers that couldn't have what they wanted, but they actually produced another 131. But that's okay. So it's just a question of saying, okay, well, our brand could have been better. Hopefully we can judge it better and judge how many we actually need to make. Okay, so unwanted inventory, they decided to keep selling their brands. I wouldn't, but that's my personal opinion. Demand projection. So you can see last quarter, let's try and highlight those, that the actual demand for the sales office was 20, just over 20, and the demand for the web center was 4, which is pretty much what I said. So what they've done is to say, well, I've got more faith in our demand being higher because we're improving, and they're going with 35 and 8. Okay, so they're doubling both of them pretty much. Now, I'm going to tell you what it actually was next quarter, because you can't just plug those numbers in and expect them to work, because there are so many variables that led to their demand being what it was. Okay, let's have a look and see what it actually was. They reckon 35 and 8. It was 76 and 25. Okay, so actually it was a lot better than they thought it was going to be. Why that was the case? They must have really improved their brands, maybe gone to markets where nobody was. Okay, so sometimes you can underdo it. So I can't say what the projected demand should be. It's a question of probably intuition, an intuitive feel about what you think it would be given what you've done and given what you think your competitors are going to do. So really, it's impossible to get that right. Okay, so any questions on that? Okay, operating capacity. So here then, let me just have a look, because okay, so if you look here, there was 134 items left unsold last quarter. Okay, and they reckon the demand, the total demand is going to be 331. So the factory will naturally assume that you only need to build 200. Okay? Just over 200. All right, so they're saying, well, there's no point building 330, but we've already got 134, so we only need to build what the difference would be. So again, you just got to make sure that you understand that. So here, the factory's saying, that's what the demand, the extra demand is that you need. So you've got to set the operating capacity to cope with that. Now, what they've done is they've actually set their factory to build more than 200, which probably was no bad thing because the demand was obviously much higher than they'd estimated. But you've got to try and get those numbers to be close together. Unless, of course, you say, I'm deliberately going to build a whole lot more just in case our demand is better. Okay? So what you do, again, is entirely up to you. But don't forget, the only thing you can really do here is to change that number. Okay? And hopefully these two numbers will be similar-ish. Depends on what your approach is. Okay, so you can change that depending on what you think the effect is of increasing the pay for your factory workers will be. But again, it is only a kind of intuitive decision. Okay, so again, you're working under maximum, not maximum, but a lot of uncertainty in this game. Any questions on that? Yeah.
I just want to clarify something. You said for example, those teams, they just sold more than what they expected.
Yeah.
Maybe because they open new office, or
yeah.
maybe they just design new product or something. But opening new office or designing new brand, it won't take another quarter to build, or it will.
So if you build an office last quarter,
okay,
and they're selling it now this quarter,
it will work now.
It'll work now. If you build a new brand now, it'll work now.
The brand only, but not the sales office.
Not the sales office. So the sales office and the factory take one, and things that you'll see next quarter, like R&D for new features. So the factory and the sales office and the web office take one full quarter to become operational. Okay? But the actual brands themselves, you could build them now, they're ready to sell and build now. Yep. Yeah.
So the operating capacity, you said that two figures have to be close together. So is it fixed capacity and operating capacity have to be super close together?
No, so the fixed capacity is the maximum in theory that you could build given the size of the factory, okay? And what we're saying is we don't need all that. You know, if we thought that our demand was 1,625, then yeah, we'd say, right, go for it, 25 operating capacity. But you wouldn't get that, of course, because of the inefficiencies. So what we're saying is we realize our factory is this big, we only want to use that, that's fine. Later in the game, you want to try and make sure that your factory keeps pace with the way that demand is going to go, so that the demand increases, the factory increases. You actually get penalized for having a factory which is much bigger than you need. Is that okay? Yeah? So, I mean, I think there may be some teams that think we're going to really push our factory because we think we can sell 1,100, in which case, great. But don't forget what you're going to need to do in that case is to add some more capacity, because otherwise you're still going to have 25 fixed capacity next quarter. So again, it's about, you know, some teams added a lot of capacity last quarter. And I said, you don't need it this quarter, but as the game goes on, you might be quite glad that you did it. Okay, but anyway, so does that answer your question? So, I mean, I don't know what your demand's going to be. So I don't know what your operating capacity should be. All I know is that the most it can be is 25. And if you push it to 25, you see that curve at the bottom there? It goes along the bottom and then just kind of goes up. And what that means is if you push your factory to its absolute limit, things are going to start breaking. Okay? It's, you know, it's when you say to people, I want you to work 100%. You think, well, hang on a second. If I work 100%, I'm not just going to knacker myself out. I'm going to be ill. Maybe work, you know, 95%, and then I've got a bit of leeway. But if you push it to its fullest extent, it actually works out a bit more expensive. Okay, so it's a bit of a kind of, what's the word? A false economy. So this team here said they've got a fixed capacity of 25. So here, you've got these two here with last quarter, okay? Fixed capacity in theory is 25. They could build 1,625. They decided to go with 7, which ended up building 455, but actually it won't because of inefficiencies. It will end up building 325, which is more than enough for the demand that they thought they had. As it turned out, they were wrong. If they'd known that it was going to be, so what was it? Let's have a look what it was. So the demand was 735, okay? So what they should have done, but of course, how would they know this? Is to change that number there so that that number is about, well, they've got 200, so maybe another 500, okay? Again, it's impossible to know it, but you get better. So the intuitive decision-making approach, which is largely what you're going to be using, is something that becomes more useful the more experience you have of whatever it is you're making a decision on, okay? So what you might say in your second piece of coursework is, we could have chosen this, but it's not much use until the end of the game when we've actually got experience to draw upon and to kind of guide us, okay? So anybody else not quite get this? Because this is the key thing, isn't it? Just saying to your factory, this is the demand we think we've got. We might have some spare inventory, so this is what we need the factory to build. Okay? I mean, I would say that if you're doing some good things and you're confident, then I would say go for a demand of about 500 or 600. Why not? Okay? I mean, even if you started with a demand of 50, but now you know what you're doing wrong, there's no reason why you can't have, you know, with a new sales office and new adverts and new pricing, you could easily have a demand of 600 or 700. But I can't guarantee that because it's just too complicated to be able to judge. Okay? But you might say, we'll take that risk because in quarter 5, next quarter, we get that extra money. Changeover. Now, this is something that, again, if you are struggling financially and you think, well, there's lots of important things I need to spend that money on, what should I cut? This could be one of them. Okay, so they've chosen to invest no money. So the changeover times between stopping those brands on the left and starting those brands across the top are what those figures are in hours. So each time you change from one to the other, that's the hourly loss, if you like, and the financial loss as well. So just go down a bit. Okay, so what if you do decide to invest in it? What should you go for? I still think that 600,000 probably gives you the optimum amount. Okay, and that will then improve the changeover going forward. And you can still invest in this until those figures come right down to below 1. Okay, so don't have to. This might be the obvious thing not to invest in if you think we're pushing it a bit and we can't really afford. Target replenishment points. Now, I don't know what to say about this because I don't know what the best combination is. Really, as I've said, this is about satisficing. This is about you trying things out, trying different priorities, different target points, replenishment points, running the simulation and seeing what your best combination would be. Okay? What I would say is, if you're building, if it suggests that you're building too many and you'll have lots of spare inventory, you might want to bring the target point down. Okay? You might want to start producing something more quickly, that second brand, if it's clear that you've got lots and lots of stock out. So again, just keep playing with this. Ultimately, I remember that the person that taught this before me said that ultimately when you get to a stage where your factory is so efficient, these target points and these replenishment points can come right down. Because if you're saying, right, target point is 20, once we get to 20, we can instantly change to the other one, and it's instant. And as soon as we realize we need to build some more of those, we can do that without any kind of big financial or time cost. So ultimately, these might be able to come right down once your once your changeover has been fully invested. Okay? So any questions on that? I'm sorry I can't give you the answers to this, but I don't have them. I literally don't. Production rules, again, try with different combinations, okay? So you've got different combinations of target and replenishment point, different combinations of production rules. There's only 2 rules that you could even change. So, and you may find it makes no difference. But again, have a look at that. If you want to know about some of this stuff, then have a look at the lecture and gives you some sort of background into why this is important and what the various options may be. Production payroll is what it is. Not what you can do about that. You still pay your people based upon what you've changed in the HR function. Okay. Production simulation, well, I mean, again, that's just what it is based upon all the other variables that you put in. So fixed capacity. So this lot decided to increase it by 0. So they've still got 25 next quarter. I don't know whether that was a good thing. I think now is, if you've got 25 in this quarter, I'm suggesting that unless you've got financial problems, you probably ought to add another 25. Now I keep saying this, but only because people keep getting it wrong. And do I have a little pointing device? No, I don't. But you can see that on the left-hand side there, 0, 25. If I click 25, that means another 25 on top of what I've already got. Not that's, I want 25 next quarter, therefore I'm going to click 25 because that will give you another 25. So I think that's where one team went badly wrong. Okay, so that takes 1 full quarter to come into operation. So this is why you need a bit of kind of forethought to try and judge where you'd be. Quality improvements, reliability. Now, again, I suspect if you are in deep financial trouble, you might want to cover, you might want to cut some costs on this. So any questions on this? Does everybody understand what this is trying to say to you? Okay, that inevitably, in the early days of any industry, like digital watches or early PCs, they weren't very reliable because it was early days and, you know, people learn about what they do well and do badly. Here you've got these warranty costs, and the higher the warranty costs on this right-hand side, the more of a problem financially bad monitors, bad hard drives are going to cost you. So what you want to try and do is to invest money in investigating why they're going wrong. I mean, $12,000 isn't a great deal, but that's because you didn't sell that much. All right, so it wasn't as if it's, you know, millions of dollars because you only sold, let's say, 113. And, you know, so actually relatively it's quite small. So what you can do, I'm going to decide now, looking at this, I've decided that the 3 big costs here, or the 2 big costs, or all of the costs are sufficiently big that I want to do something about them. So I'm going to do something about all of these. So I go to quality inspection and I do what these guys patently didn't do, which is to tick all of these boxes. Or 3 of the boxes, or 2 of the boxes, the ones that I think are costing me most money. Okay, that means that there's an inspection going on. I actually get somebody to go on and see what's going wrong. And then also, given what I've chosen here, I should choose something that's consistent with what I've just chosen to find out why it is that there's a difference between the quality I want and the quality I'm getting, the variance study. So it means extra investment in that. But what that means is the reliability judgment, which at the moment is 64, will go up next quarter. Okay, so if you look at your customer needs and wants for the segment that you're aiming at, look and see how important reliability is. Let's have a look. Let's have a shufty at this and see what marketing research, customer needs. Okay, so you can see somewhere down here, where is it? Yep. There should be reliability product. Okay, there we are. So clearly it's important to all of them, but it's particularly important, I think, in Mercedes, 123, and the Traveller. Because, yeah, think about it. You're on some train like Alfonso is going to Newcastle or coming back from Newcastle, and it breaks. That's a bit of a problem. If it breaks when you're in the office, you've probably got another PC you can use, okay? So what I'm saying is, if you're building Travellers, if you're building Mercedes, then, and maybe even workhorses too, because that number is still quite high, reliability is important. So it's something you really can't afford to ignore. So how much of an influence would be the level of reliability between the customer thinking, should I buy yours or yours? You've got reliability 69, yours is 64. That's going to influence them to go with you lot. Okay, so you've got to just bear in mind that you can't leave this. Because again, this is part of your scorecard at the end. Okay, so all of these things are important. Okay, so that's manufacturing. So, oh yeah, let's go forward. Quarter four. Okay, any question on the quality? So over the next few quarters, the things you've invested in, you could take even further. Okay, so it's not like this is the only chance you get. So even if those things you didn't invest in now, you can invest in over the next few quarters when you've got more money. I'll talk a little bit about what's going to happen next quarter as well, if we've got a bit of time. Pro forma accounting, just check you've got your $1 million. If you haven't, the game is going to say, well, tough. You should have loaded it in, right? So just make sure that you've got it. Cash flow. So the thing people always say is how much to leave in my account. Last quarter, they reckoned about 300,000. What I would say here, my personal opinion, right, is this team's estimation for their revenues was 836,000. Turns out probably more. The worst case scenario, realistically, unless they've done something spectacularly wrong, is that what happens if that revenue is only 40% of that figure? Okay, if you manually change that, what would that live pro forma change to? So that tells you, if it's a disaster, how much would we need to have left in our cash account to save Guido from breaking our legs? Okay, so that's the only suggestion I can give you. By all means, be optimistic. Just don't leave one. If you see $1, it means you're going into debt. And in fact, you can see this. Obviously, this game is wrapped. But as you go along, it will say, oh, at the moment, I'm telling you now, mate, you'll be in debt to the tune of $400,000, in which case, you know, that warns you that you're cutting it a bit fine. Okay, so these guys here left about 383,000, which I think sounds about right, 400,000. I'm just going to see what they did do, all right, because that's always interesting. Let's go forward to quarter 5. So what were their revenues? Well, 1 million, almost 1,100,000. So actually they didn't need to be so careful, but they couldn't possibly have known that. Okay? So, finance, really nothing to say there, really. It's all stuff that you should either ignore or you should ignore. Okay? Certificate of deposit, don't. Payment to business partners. What you might do, I mean, some teams might, you know, decide to give money away in exchange for market research, but again, can you trust your competitors? I wouldn't. Nothing against you guys, but I just wouldn't generally. Okay, so we've gone through pretty much all the things that you need to think about. Is there any question more generally? And this goes for anybody online too. Anything else that I haven't explained? You've got until Monday at 8, which at least means that we have the afternoon off tomorrow, which is good. It does, however, mean we have to wake up earlier on Monday. Yeah.
Just pro forma, which they put only 1 million, but we are expecting 5 million, right?
Yes, what I'm saying is, in this quarter, you should have an extra 1 million for your investment. For quarter 4, yep. 5 million, you'll get 5 million. In the old days, what would happen is, you would write a report, we'd have a bit of a break between quarters 4 and 5, and you'd write this report on what your plans were for the future. And based upon that, we would give you anything between nothing and $5 million. But because A, we haven't got time to do that, and B, because we're generous, we're going to give you all 5 million. Okay? So what are you going to do with that 5 million? Sounds a lot of money. It is, but it soon gets soaked up, all right? But of course, hopefully you've made a lot of money through your revenues this quarter. So in addition to that, that 5 million should allow you to do lots of things like, show you this, R&D investment, all right? So this is where you've got lots of things that no PC can currently do, but your consumers really want, all right? So there are things here that you say, well, hang on, if I look at the customer needs and wants, and I can see these things that I could invest in, which of those is going to give me, which of those is going to satisfy those needs and wants? So this team is invested in a slim laptop, presumably for the traveler segment. And that was it. Because obviously there's other things they need to spend money on. So what that means is, the more money you spend, the quicker that's going to be available to you. Again, don't worry about this now. You don't have to worry about this until next quarter. But you'll see that it says they're spending $1.918 million, and that will be available to their brands in quarter 6. They could have said, well, I don't need it that quickly. I'm going to spend less money, but it'll be available in quarter 7. Of course, by that stage, your competitors have got in there with a slim laptop case and are now thinking of something else to improve. So it's always a bit dangerous to leave it too long. Okay, so that's for the future. That's where you can start investing your money and improving your brands. And even if you wanted to make some more revenue, sell the R&D that you've got to these guys for whatever you want to negotiate. So you might have to actually talk to each other, as in the teams, talk to each other. Can we do a deal on what? I want to buy, I know you've got this available because you've made it an offer to all of us that it's available to sell. We could do a swap. You could have that, I could have that, we could pay the difference. Okay, so you can have these contracts, which are kind of legally binding in the context of the game. This is where it got nasty a few years ago. One team said, yeah, I'll sell you this, and then said, nah, not doing it. You know, I know I've agreed, but the game can't force it. So basically, up yours. And the game has changed to force it since then, okay, which is good, because nobody needs that kind of aggravation. Okay, let's go back. Okay, so we're pretty much there. Any other questions? Again, it'd be nice if we had the questions now rather than sort of being ambushed at the top of the stairs there. And if there are still people that are not taking part in your team, email me. No, even better, email Alfonso. He's the bad cop. Okay? So he's the one that's going to do the shouting at people who just aren't participating. And if it's clear that they're not participating, then their mark will reflect that. Yeah, hand at the back, yeah.
If we sold all of the inventory now, do we get them money now?
Yes, yes. So no, as when you say now, it comes in between when the game wraps on Monday at 8 o'clock and you get it as income for the next quarter. So this is the way the game works. The last thing I'll say, okay, when the game wraps, you think, well, can I afford to do that? I don't know, because if I have to pay my revenues before I get my, pay my expenses before the revenues come in, I can't afford it. The way the game works is you get the money, all the income, before anything goes out as expenses. So you can afford to do more than you thought, okay? So just be aware of that. Money comes in before any expenses go out, okay? Good, yes? Well, again, what's the question? How much to keep it as a minimum? As I said, I think if you go to your pro forma accounting and look to see what the revenues that you projected would be, and say, realistically, the worst case scenario, unless you really overestimated it, would probably be about 40% of that figure. If you change that figure to 40% of it, and see how much that leaves you in your cash account, that would give you an idea of the worst case scenario. I would probably say around about 400,000, 500,000, depending on how optimistic you'll be. But again, if it goes badly wrong, that £5 million can be used to pay off that debt. Okay? So it's a difficult one to answer because, of course, somebody might say, I'm going to sell 2,000, in which case I'd say you need about £1.5 million in that account. If you're only pushing it by about 100,
I'd say maybe need 200,000, so it's impossible to know what the actual right figure would be.
Okay, good. Well, best of luck. So next quarter is where it starts to get exciting because you've got bank loans. I know they're not exciting, but you can borrow more money, R&D investment, okay, and other features. So, you know, it's starting to get a bit more complicated. Okay, right, I shall stop recording this and make this available